I don't want to jinx it, but it has been a really good start to 2019. The NASDAQ off to its best start to any year since 2006. And the small caps doing even better. The Russell 2000, best start since 1987. But will these metrics be enough to propel markets to record highs, the ones we saw in 2018? Do we see them again in 2019? We bring in Nuveen's chief equity strategist, Bob Dahl. He says no in your list for your predictions for this year. And you're also predicting this, pretty pessimistic here, but we were talking in the break, and Bob Dahl says, okay, this sounds bad, but it's not as bad. But this is the bad stuff. The Treasury yield curve flattens, corporate earnings growth estimates weaken, and plenty more. So here he is in person, the legend, Bob Dahl. So you're not optimistic, but are you pessimistic?
No, we think markets will continue to go higher, but not a new high. We've had 10 straight years where when you bought the dip, all you had to do was wait a bit and we'll hit a new high.
Right.
I don't think that's going to happen this year.
We found the bottom, though.
I think we found the bottom.
Christmas Eve.
Christmas Eve, exactly. 2350 on the S&P. Who would have thunk it? And that was a gift. Part of the rally we've seen this year that started in the very back end of last year was recovery from the overly concerned recession worries of late 2018, exacerbated by the absence of liquidity because everybody hit the road and went somewhere else.
Yeah. Okay, so is there a recession in 2019? And if not, do we just escape one? How close do we get?
I don't think we get close. So real GDP round numbers in 2018 was 3%. We're going to slow to 2, probably 2 and a fraction. So that's a downshift without question, but it's nowhere near a recession.
Yeah. The World Bank downgraded U.S. growth for the year to 2.5%.
Yes.
That's not a recession.
I'll take 2.5. Where do I sign?
Okay. Sign right here. No, we'll hold you to it. 317 on whatever day this is, January the 9th. We get earnings. They start to come out next week, and then we'll hear from these major companies. You know, how are you doing amid tariffs and higher interest rates and this and that and all this uncertainty? Do you expect to see an earnings recession? I
don't. I think earnings in the fourth quarter, to be reported real soon, will be good. Not as good as the third quarter, and the trajectory of commentary will lead us to believe they're going to be even slower for the rest of this year. Analyst estimates, as you know, have been slowly but surely since Labor Day coming down for 2019. I'm not sure that the reduction in estimates is over, but I think we'll have a positive earnings year.
Okay. What do you make of the Fed? I mean, Jay Powell speaks tomorrow at the Economic Club in Washington, D.C. How do you think he's doing? How do you think the Fed is managing everything? I can't even keep track of how many Fed officials spoke today, but they all seem to have the same message. Would you agree with that?
Yes, I think the message is being orchestrated. The chairman read from the script last time. The prior couple
literally
of times,
looked down.
Correct. The prior couple times, you know, we don't know where neutral is. We have to go past it. Automatic pilot. I mean, he was not speaking marketese. And I think he's learned that I've got to, as chair of the Fed, be very careful what I say and how I say it. And hopefully he's back on track. The
Fed president of Chicago, Evans, he suggested that the neutral rate is 3.25%. How does that sound to you?
We'll only know after the fact. I think 3 3/4 is a little on the high side. I'm not sure it's that high.
3 1/4.
Yeah,
3.25.
Right. I think that's a little on the high side. I hope it's a little on the high side. If we get to those kinds of levels, that means inflation's probably a little higher than we think, and we think inflation for now is quiet, but watch those wage numbers.
Yeah, the 10-year Treasury, I think 2.7%. What's a comfortable level looking at that benchmark for you?
I think that will continue to move slowly but surely higher, assuming no recession and a decent earnings environment, and we'll close the year closer to 3.
If wage growth keeps going up, how do you think the Fed responds to that? Should everything else in the economy look okay? Then we got higher rates.
This is a very good question.
Yeah.
Trailing 12 months average hourly earnings 3.2%. 6 months ago it was 2.6. So I'm not upset with 3.2. It's great for the consumer. But if we add another 0.6 in the next 6 months, we'll be knocking on the door of 4%, and I think that would get the Fed's attention.
You're going to share some picks with our viewers now, how they can make some money. What are your picks?
So our predictions, let's start with sector, since that's the closest. We like financials, technology, and healthcare. They're our favorite 3 sectors, with energy a close 4th.
Okay.
I think that's the place people can make some money this year. Got to own companies that have some predictability, decent balance sheets, something that's they're able to stand up in a crowd and be noticed. some innovation, some ability to raise prices. We're getting later in the cycle.
When you say tech, what parts of tech? Because I feel like this whole sector has completely changed with privacy, with regulation,
Yes.
And now with the slowdown.
So unlike a year ago, when if you asked that question, I would have talked about a lot of mega cap growth stocks.
Right.
Today, we're not out of those stocks, but we want to supplement it with some value stocks. A Cisco, the Hewletts, HPE, HPQ. Lower expectation names that have decent cash flow and can manage their way through an okay economy.
We got a lot in. Bob Dahl, thank you.